Yeah, and one thing you said before, I just the last episode, I think it was the last episode, I just talked about cash being a position. It's something you sort of alluded to
Hmm.
where um, you know, when again we do a lot of bullish strategies, the market kind of pulled back recently. We had a couple losers because when the trend ends, you lose. And so again, the questions and the sort of things come up. Well, should we do something bearish here? And for some of the strategies you're trading, um, you know, you're not necessarily, and I shouldn't say your strategy. For me, at least, like I might have a bearish strategy, but it's not the opposite of the bullish one. So if my bearish strategy may not be triggering on a minor pullback, and my bull strategy isn't triggering. So I'm really just sitting in cash from those automated trades. Is that where you kind of see yourself as like cash long, cash then long, that kind of thing, or what do you um which would imply that you're not fully invested all the time, right? Is
Right.
because you're it's not like you're going full port long and then oh and now I'm short and long short. So what do you think about cash as a position and where that fits into your strategies?
Yeah, I think the trend following approach that I take means that there are periods of time where I am in cash in the long portfolio or in the long strategies, uh, and I think that during those periods, partly what has helped me is that I'm taking some capital that's already in futures accounts to have more of a short bias during those periods. So I'm picking up a lot of benefit during those periods while remaining flat in cash on the long portfolios. So any cash that's picked up on the short side on futures just gets rolled back over into those long portfolios. And
Gotcha.
maybe another way to look at this is like my thesis on this has a lot to do with the market that I'm trading. I do have a long bias on equities because they tend to go up and to the right over very long periods of time. But if we're
Mhm.
looking at something like nat gas or even oil, you could see more of a 50-50 shift between long and short because the price action tends to trend, but it can trend in either direction, right? So we really want to kind of think about the market that we're trading there and why we would be mostly long or maybe even more neutral, ready to go either direction. And I think that's largely market contingent. You know, gold is kind of one of those things where for a long time it would basically go sideways for long periods of time, and only recently have we seen this really nice trending upside to gold. So you might incorporate kind of a long bias on it, but eventually that's going to start to pull back if equities look stronger and there's less fear of a recession in the market and so on and so forth. So it really depends on the market.